Negative credit items. You need to understand how to take care of those, what they are, what's in your control, what's not in your control, and really better get your arms around that early in the process of pre-qualification on any loan product. Because if you don't, it can cost you thousands. So in today's Mortgage Real Talk, we're going through what to do with those. Hi, I'm David from the Cramm Group here at Home Mortgage Alliance, and we've got an expert, Devin Norcross, who is dialed in to understanding what's happening with credit and what you need to do to if you are going to tackle the big challenge of working on your credit yourself, what you need to do and what you need to know. But he's going to give you a lot of expert advice here, which is worth a lot of money. So welcome, Devin. Thank you so much for being here. And this is a topic, just a hot one. So please dive into it for us. Tell us a little bit about that and how our viewers can best get their arms around what to do there.
Yeah, absolutely. To add on to what David is saying, I think the most important thing is you make an educated and informed decision before you do anything with your negative credit, whether it's a collection or a credit card charge off or a tax lien or a judgment or a late payment. There are things that will drastically improve your credit, and there are things that will drastically reduce your credit, even if it feels like it was the right thing to do. Okay. So let's first talk about what are some negative items. We'll talk a little bit about debt settlement. Let's identify some negative items: late payments, collections, charge-offs, profit losses. And now, what is the difference between a collection and charge-off or profit loss? They are looked at essentially the same on the credit report, but really what they are is a placeholder for a company to figure out what they need to do with the IRS. Okay. If you have a charged off account, they're not necessarily in a collection status. All right. If you have a collection, they are actively collecting. If you have a profit loss, they may have walked away from the debt. They may be issuing you a 1099-C and saying, hey, file this on your taxes as a taxable gain form. We're not trying to collect on this anymore, in which case they need to take the balance off the credit report. We have public records like bankruptcies, tax liens, judgments. What do we do with those? Do they impact the credit score? Are they even showing up on the credit report? So the most important thing to understand is some of these items universally will improve the credit score as you pay and or settle them. And some of them, they can get very tricky. With collections, like here we have impact receivables management. This collection is weighted by something called the date of last activity. All right, this trade line, as we would call these items, trade lines, is not showing the date of last activity, but you can basically estimate that this apartment complex collection, the row at 26, was generated before 2018 because that's when it became a collection with impact receivables management. So what that means is the date of last activity was 2018 or earlier. If we pay or settle this account, a couple things might happen. Number one, this is only reporting on TransUnion. If it shows up as a paid account, it might come back as a paid account to all three credit bureaus. On top of that, if it comes back as a paid account, it will update the date of last activity to say October or November 2021, and it will weigh much more to the credit score than it previously did. All right. So what we did on this account is, you notice here it says, sorry about that. It says pay for delete. So what we did, we settled this account for around $3,000, and the creditor agreed to delete it off the credit history. Now, this is an opportunity that we have with secondary debt holders. People always ask me, can you get my credit card off? Can you get my repossession? Possibly through a different process. But when we're talking about a pay for delete negotiation, it's something that we do with our clients frequently, or for our clients. That's with a secondary debt holder collection agency. Capital One, Chase, American Express, Bank of America, as you see here, they're not going to remove these items unless there was a bank error on their part. And it's not that they can't legally, it's just that they choose not to. Okay.
Devin, let me interrupt you for just a second, because we get this question a lot. So I just want to make sure that people really hear sort of the clarification. When you are saying delete the trade line or that creditor's item versus just showing it as being paid off, because we have people who go, great, I'll go take care of it on my own. They come with a settlement, give them that $3,000, and then the thing doesn't go away.
Yeah. Yeah. So, obviously a full removal is the most beneficial. So this collection, impact receivables management, it came on the credit report at some point in 2018. It reduced this credit score. When we negotiate a pay for delete agreement, or if we go to the credit bureaus utilizing the Fair Credit Reporting Act opportunities to contest the account legally, and it gets deleted that way, there's the two ways we can remove accounts. The score was going to go up like it was never there. Now, when you look at something like a First Bank home mortgage foreclosure, a Capital One auto for repossession, or as we see here, a credit card collection or charge off, when you settle it, your score goes up, but not as if the item was never there. So to use round numbers, let's say that item as it sits is a net negative 10 points. If we settle it, it might be a net negative 4 points. But there's still evidence that the banks had to go through a lengthy collection and outreach procedure to get their money, and they were paid back less than they were initially owed. Now, I'm a big fan of settling. I don't care about them getting paid back less than they're initially owed. Most of that is just fake interest. When you see these balances, they're usually so inflated with fake interest. Most of the time, the bank is interested in getting back what they initially lent. What did you spend? If they can get back to there and sometimes even less, we got to win.
Now, that's a different process, though,
Yeah.
than these companies that say, oh, give me all your debt. You pay me one payment a month and I'll, negotiate that for you for everybody else.
Yeah, so there's debt settlement companies. Some of the big ones come to mind, like Freedom Debt Relief. There's Global Debt Solutions. There's National Debt Relief. They have a program that I can't stand, and that's that they charge about 21% of the total debt.
Yep.
So they don't charge a percentage of what they save you, which is how I approach it, meaning I am motivated to save you a lot of money. They charge a percentage of the total debt, and they pay themselves before you pay the creditors. They work out a negotiation. They'll usually pay the creditor like $1 or $5 out of your accrued escrow account, and then they pay themselves the 21% of the total debt. No, we don't do that here. We do one-time debt settlements or deletion letter negotiations, or we send letters to the credit bureaus to aggravate and contest them on these items. And we see a lot of errors. I'm doing a screen share. Let's come up here and talk about just some of these errors we see. These are all very recent files. We're talking about negative items. So let's talk about the data loss activity. On the right side of the screen, you have a collection called Portfolio Recovery Associates. Now, the data loss activity on Equifax is reporting October 2017, which is accurate. Unfortunately, Experian and TransUnion, or the collection agency, we're not sure who, has re-aged this account. They're reporting a current DLA date. And what we see is on Equifax, our score is 650. And on TransUnion Experian, it's 52 points lower, and it's 70 points lower. So this is a great, a really good example of how important the DLA date is, how much an older collection with an older DLA date is going to weigh much less than a newer collection, or the potential impact. Let's say this account had been paid off and that DLA updated is 5/21 or now 10 or 11/21. You would be seeing these same impacts. On the top left here, we have a December 2020 30-day auto late. In the email, the VP of the bank confirms that this card was traded in 2018. That late payment is inaccurate. And instead of saying, hey, we'll let the credit bureaus know there's an error there, they say you should go dispute it. So they're saying it's an error, but they're also not going to take the initiative to fix their own error.
That's ridiculous.
Below that's a duplication. Okay, we have an NBT bank charge off. This was a personal loan. I'm not sure if it's an installment loan or business loan. It doesn't say. It does say installment. I don't know if it's auto or personal. It's unsecured. So this is essentially a business loan or signature loan. It charged off at $38,000, was sold into a collection agency for the efforts of collecting, and it now has a $36,000 balance. You can have a charge off, a profit loss, a collection. You can have a collection company reporting on that. You can't have a balance on both. This appears as if this person has nearly $80,000 in outstanding debt associated with NBT, twice as much as they indeed truly have. So when it comes to this kind of stuff, it could be something like, give me 1 second. It could be something like a judgment. This is a $5,000 judgment. We settled for $1,500. So just because you have a judgment, even though they're not garnishing wages or you're leaning against your property, they can at any point in time. We might want to work on that judgment. Mm-hmm. A lot of these items, these judgments, these tax liens, things like that, they are not reporting to TransUnion, Experian, and Equifax. They are reporting to LexisNexis, the fourth major credit bureau. And LexisNexis credit data is not calculated by FICO into scores. So you don't really see an impact from them. They just prohibit you from purchasing things. And then ultimately they might come in and levy your bank account, where they take money out of your savings account or garnish your wages.
We had one of those literally just come up today. We pulled what's called cavers,
Yes.
which is something which we have to pull on an FHA loan. And a student loan showed up as a collection related item. And so, unfortunately, they don't tell us what it is. It wasn't on his credit. So now he has to go kind of fight that out with them. And supposedly his dad was supposed to have paid it and didn't. And so
how large was it?
About 5,000, I believe.
Okay. So, when this happens, from what we do here at Norcross Consulting, when we have clients that pop into what's called cavers, this means the student loan wasn't showing up on the credit report as a cavers is going to be pulled on any government loan. So an FHA loan, a USDA loan, a VA loan. We would either work with that client to pay and or settle that loan to a zero balance so that they can stick with that government loan that you initially quoted them, or try to get their credit score up to a threshold credit score where they can segue into a conventional loan where they would not then pull cavers. So we really have two ways of approaching that.
Excellent. Excellent. What I really hear is that there's a lot of bad data out there. There's a lot of creditors who are saying, yeah, it's an error, but you just take care of it on your own, and we recognize it's an error, but it really isn't our issue to fix it. And it seems like it's a process that with 3 different credit bureaus is time intensive, it's knowledge intensive. Is it expensive to use a service like yours?
No, it's not expensive. You do want to be careful when you're talking to, creditors. When there's errors, they're very quick to say, just dispute it. And saying just dispute it is really just the quickest way to get you off the phone. I talk to a lot of these banks, and they're making errors, and you had to say, no, that's not what we're going to do. That's an automated process. Your robot is just going to confirm this data because that's what you're seeing, but it's an error, and we need to make a human decision when we look at all the details around this error.
Mm-hmm.
So we do the dispute process. It's just one of the many different approaches we bring to fixing credit. On a monthly program, I charge $99 to enroll and $109 a month.
Wow, that's it.
Thank you. Yeah, and I would say about 70% of my business, that's what we need to do. About 30% of my business, we don't need to do that. We need to do one-off stuff. I might be settling one credit card out to get you over a 680 threshold score. I might be negotiating for 1 or 2, deletion letters with collection agencies. So we don't need to go contest things. We don't need to send disputes. We need to pay these accounts, but we need to pay them with the proper expectations outlined up front before payments made.
Brilliant. I just love that. So reasonable, economical, and it is a very smart process which you guys employ. And I can tell you from what we've seen from the clients which have used your service, they've gotten really good credit score lifts out of it. And we've been able to save them thousands in interest as a result, or sometimes just get them into a house.
Yeah.
So that's fantastic. Devin, thank you so much for all the information today. I greatly appreciate it. I realize you have kind of a hard stop, so thank you again. We'll look forward to doing more of these here over the coming weeks.
Sounds great. I'll talk to you real soon.
Appreciate it.